So I'm sure a lot of you guys have heard of the company Instacart, right? Especially during the pandemic, 2020, 2021, a lot of people were using Instacart because, well, they didn't want to go to the grocery store and shop for themselves because of all, everything going on during that time period, which we're not going to get into in this video. But yeah, Instacart was very hot at that time and probably still doing pretty well right now. I'm not sure how the numbers compare, to be honest, but we're going to break down what's going on with Instacart as they're now looking to go public very soon here, guys. So we're going to break down a bunch. If y'all find value, hit the like button, make sure to subscribe, and don't forget to get up to 16 stocks from Moomoo, each up to $2,000. Check out the details, link down below. We'll talk more about that later. And now let's dive into it and talk about Instacart, which again was very popular a couple of years ago, still pretty popular now. Maybe not as popular as it was, I don't know. But let's talk about what's going on here as the online grocery firm, you guys can see, seeks up to a $9.3 billion valuation in their IPO, which is a pretty hefty valuation, guys. Let's dive into this article and see what's going on. And first and foremost, guys, if you don't even know what Instacart is, let me tell you what this is. I don't know, you guys have probably heard of it, but are there some people out there that have not heard of it? Let me know in the comments. But essentially, it's an app where you can get other people to shop for you. So in other words, you get the app, you pretty much pull up where you want to shop at, whether it be, Walmart or Kroger or whatever places are in your area, right? And you go and you click that, and then you actually shop on your phone. You put in your order, and then somebody out there goes and shops that order for you. Then they deliver it to you to your house. I mean, that's essentially in a nutshell what this service is, what it does. And I'm sure you guys have heard of it, most of you out there, but I'm sure there's a couple people that haven't heard of it. So again, in other words, it's an app where you pretty much order your groceries, they go out, they shop for you, they bring it to you, and of course you have to pay a delivery fee, a service fee. It's pretty expensive, honestly. I'd rather go shop for myself, but that's what it does. And let's scroll down here a little bit and see what's going on in this article. So Instacart yesterday on Monday submitted an updated filing for its upcoming initial public offering, saying it is looking to raise up to $616 million of fresh capital alongside existing shareholders at a valuation of as much as $9.3 billion. In the filing, Instacart said it is setting an offer price of between $26 and $28 for its IPO, and Instacart said it would issue 22 million shares in total, comprising 14.1 million of newly issued shares from the company and 7.9 million shares from selling stockholders. At the higher end of that pricing scale, Instacart will be looking to net roughly $616 million in proceeds. And of course, as you guys may or may not know, I'll tell you right now, when a company IPOs, you know who gets rich? Not the people buying it on the day it IPOs, the people that bought years ago or the early investors. That's their big exit, in other words, or their big day is when it IPOs, because that's when they make a crap ton of money, and a lot of them could end up selling out based on the terms and conditions of their stake, which we're not going to get into in this video. But typically when, companies IPO, that's when a lot of the early on shareholders exit. Maybe they stay on board, who knows, but the early on investors, they have the option to cash out and make a lot of bank, and that's probably what's going to happen. Not probably, that is what's going to happen when Instacart does end up going IPO, right, or IPOing. And Instacart looks to set an attractive valuation of between 8.6 to 9.3 billion on a fully diluted basis. Its share count will total 331 million shares. And Instacart previously said that multinational food giant PepsiCo would come on board as an investor in the company, purchasing $175 million of shares and a concurrent private placement. And Goldman Sachs, one of the underwriters, will act as an agent in connection with the the private placement and receive a fee equal to 1.5% of the total purchase price of shares sold. And in my opinion, guys, if you want me to be honest, I think Instacart royally effed up here. Not because they're going public. I mean, eventually, at the end of the day, every company's goal from, the little itty bitty company they start out at, maybe not every company's goal, but one of the main goals is to go public. So kudos to them for being on the verge of going public. It's about to happen, right? Kudos to them. But I think their timing is completely off. I think if they went public, let's say in 2020 or 2021, man, what was the valuation? $9 billion, let's say, for Instacart. All right, pretty good, awesome, right? Great. But if they went public in 2021, they definitely would have been part of that meme stock, maybe not the meme stock craze, but do you guys remember how many SPACs there were back, in that time period that ended up going public, right? How many companies went IPO the traditional way? How many direct listings there were? It was through the roof. It was unbelievable. And that's when they could have gotten a way better valuation, right? That $9 billion that they got today, that easily, in my opinion, could have been a $20-30 billion valuation based on just the craze of IPOs back then. How many SPACs were going, the whole SPAC craze, right? It would have been way more. So I think Instacart, great. They're going public, fantastic. More money is going to come in. They're hopefully going to progress as a public company, which isn't guaranteed. A lot of companies, sometimes they're better off just staying private, but we'll see. Hopefully they do great, but I think the timing is just awful. They should have went public 2 years ago. They should have made it happen. They probably wanted to. I don't know what's going on behind the scenes, but they didn't do it. And now they're going public now. I guess better late than ever, rather. But, I think it's way too late. Or not way too late, but the timing could have been better if they wanted a higher valuation. But think about it, guys. Let's say they did go public 2 years ago or whatever. Their stock probably would have gotten into a bubble and it would have gotten destroyed by now, most likely, considering how a lot of those stocks played out during that time period that IPO'd, that were very hot. And you can see a lot of those now, 2 years later, they're down massively. So maybe Instacart could have been in that same predicament. I don't know. We obviously will never know because they didn't go public 2 years ago. Either way, they're about to go public now, and we'll see how it does end up playing out. And full disclosure, I am not a big fan of buying companies once they go public. In fact, I never do it. I don't want to say I never do it, but I rarely ever do it, man. It's got to be one of those companies that I think is a game changer that I want to have at least some skin in the game in when they go IPO. Maybe if it's a game changer company, I'd consider it. But I don't think Instacart's a game changer company, guys. I think they're a decent business that is a little late to the game with the IPO. And I think they're grasping at straws at this point. I don't know. We'll see. But overall, that's what's going on. And I don't plan on buying Instacart anytime soon, their stock. But we'll see how it goes moving forward when they actually do go public. So what do you guys think? Let me know your thoughts in the comments. Hit that like button. Make sure to subscribe. Don't forget to follow me on Twitter as well, guys, at Stas Talk Stocks, or just type in StasSurfS. You'll find me. And don't forget to get up to 16 stocks for Moo, each up to $2,000. I'm telling you guys, this promo is by far the best one right now. Use that link down below, or just simply go to StasSurfS.com/Moo. Once you open up your account and fund it with your initial $100 deposit, you get 5 stocks right off the bat, and fund it with at least $1,000, you get 10 more stocks, totaling 15 stocks. And listen to this, guys, fund it with at least $5,000 for a limited time. On top of those 15 stocks, you also get a free share of either Tesla stock or Google stock, which is a limited time promo offer. So make sure you guys jump on it. Link down below. And full disclosure, that is an affiliate link. It helps out the channel. I appreciate you all as always. And with that being said, cheers. I'll catch you guys in the next video.